Hey everyone, welcome to the KE Report, another daily editorial. This time chatting with Dave Erfle, founder and editor of the Junior Miner Junky. Now, Dave, there's a lot for us to talk about in the precious metals space on the back of the Fed meeting and statement from just yesterday, and read across the screen, not just in the metals, in pretty much every market after the Fed. Yes, they cut rates by 25 basis points, but really cut back the projections for next year down to just 2 rate cuts in 2025. As I said, all markets pretty much reacted negatively to that, except for the dollar, which went higher and is now at, I think, a multi-year high. Dave, talking about precious metals, though, gold is down. It's at about 2,600 today. More importantly, I think silver breaking below $30, even below 29.50 right now. What's important about the moves just in the precious metals before we get into the underlying equities?
Yeah, it's really interesting how this is all playing out within this now 8-week consolidation triangle in the gold price, right? I mean, we had that huge move up, what, 54% in a year, where the gold price went up almost $1,000 from October last year until late October this year to 2,800. And then we had this sharp correction, about 10%. And now the gold price is consolidating in a symmetrical triangle with the downtrend lines around 2750, right? We had a daily close above 2750, but it reversed right away after that daily close, and it's reversed $150 now. And gold is testing now the bottom of that triangle, the bottom of the uptrend triangle, uptrend of the in the triangle around 2600. So if we see a weekly close below 2600 tomorrow, then that would suggest that the gold price is likely going to come down and test its 200-day moving average, which is around 2480 right now, and it should be around 2500 right at the end of the year or the beginning of January, which is basically a normal correction, right? I mean, gold hadn't corrected as much as 5% during that $1,000 move in just 10 months. I mean, in just 12 months. So, as far as the gold price is concerned, this is a normal, healthy correction. But as far as the gold stocks are concerned, it's really hit them hard. And if you take a look at the GDX and the GDXJ, there's really strong support at 32 in the GDX. That's about 5% lower than where it is right now. And that's where it broke out when the gold price broke out of that cup and handle breakout around 2100 back in March. And GDXJ, there's solid support right around 40, and that's about 9% lower. So I wouldn't be surprised if we see those levels hit, especially if we see more panic selling in the stock market, right? I mean, this all keys around the Fed coming out and basically surprising the market and saying, well, only looks like we're only going to have to cut 2 more times in next year as opposed to the 4 times we've been projecting because inflation's not going away, yet we still lowered rates a full percentage point even though inflation's not going away. So we've caved on inflation. And they have to cave on inflation because of the rising debt that they can't control. You know, they can't control government spending, the nearly $2 trillion budget deficit. So there's all these things swirling around into the end of the year. And since Trump was announced president, we had the German government collapse like 2 hours later after he was declared the victor, followed by the French government collapsing, and now the Canadian government looks like it's collapsing this week. I mean, there's all this stuff going on, and the gold price is still consolidating within that triangle. And on top of that, it looks like Trump's not even president yet, and he's trying to stop a funding bill that needs to be passed by midnight Friday. And if it's not passed, then all these government agencies start shutting down. So there's all this going on, and it's really interesting. And this time of the year, there's supposed to be a Santa Claus rally, and everybody's winding down as far as the market's concerned. But volatility is really ramped up, and it's a different story this year.
It is, but it's still been a pretty good year for these markets, a good couple of years for these markets, and it was a broad-based rally nearing the end of the year. But now, definitely, hey, the Fed has thrown some cold water on all those investors, traders that just want consistent rate cuts. But Dave, back to some of your projections on GDX, GDXJ, even SIL. they have broken some at least short-term support levels here. So the trend of higher highs and higher lows has changed over the last about 2 months. How worried are you that this could be a longer term correction, that it might stretch into Q1, even the first half of 2025?
Yeah, I mean, it's definitely possible, but if you take a look at Trump 2.0's policies, they're very inflationary. The Fed's basically, stuck between a rock and a hard place here. And as far as the debt is concerned, they can't stop that. I mean, look at the bond market. The 10-year yield continues to rise, even though they continue to lower rates. So the bond market is basically saying, hey, there's something going on here and the dollar could be in crisis here. I mean, we've seen the dollar and gold rise together when there's crisis in the marketplace. So, as far as the geopolitical component in gold, thankfully that's gone down because we've got another truce on the table in the Middle East, and Putin has just come out and said he's willing to work with Trump on ending the Ukraine war. So that's a good reason for the gold price to go down. But I don't see those problems going away anytime soon. We've also got NATO warning of war heating up in the Middle East before Trump takes control on January 20th. There's all these things going on. So with all this uncertainty, gold normally does pretty well during uncertainty, especially during sovereign debt crisis, which we're in the middle of right now. And that debt ceiling needs to be raised again, of course. I mean, it's over 36 trillion now, and the interest on the debt alone is over $1 trillion a year. And there's all these figures that just are mind-boggling. Debt to GDP over a percent. If you add in the unfunded liabilities, it's over 300%. So I don't see the gold price going down much lower than 2450, 2500, which is right around where the 200-day moving average is right now. And there's also pretty good support there. And that would also be pretty healthy because, when you have a parabolic move like we had in the gold price going up $1,000 in a year without as much as a 5% correction, this is a healthy correction and a healthy consolidation. But as far as the gold stocks are concerned, seeing the stock market roll over is a good thing because eventually, these investors are going to start looking for an undervalued sector while they're, looking for something to rotate their profits out of these overvalued stocks. This bull market has lasted basically since 2009 in the stock market, and it's due for a correction. So this could be the start of one.
But if this is a start of one, Dave, look, investors rotate money into sectors that have some sort of momentum to them. They're not usually out there bottom fishing sectors, and not like the precious metals stocks are at any way at a bottom, but they don't have that momentum either. And without a rising gold price and a rising silver price, can you really expect investors to all of a sudden go into these miners that broadly have disappointed?
Well, listen, basically, let's take a step back and look at history. The current sentiment and the basic lack of retail participation in this tiny sector pretty much mirrors the late 1990s, early 2000s, when tech was all the rage and junior mining stocks were basically unloved and underowned as well. But by 2000, the rebound was really underway and the stock market was rolling over, and a lot of those profits started to come into this tiny sector. And in the next 7 years, saw the TSX Venture rise over 400% from where it began in 1999. That's when the venture started. But, looking at a current situation, the mining sector needs to find a way to attract some of the $750 billion invested in cryptocurrencies before we can expect a similar outcome. I mean, people earning money from crypto have to put their new wealth somewhere. And basically, the extreme undervaluation of these quality juniors in relation to the gold price is an opportunity for younger generations to invest in mining. They just have to find it and get into it.
They do, but that can be a big ask when they do seem so dedicated to the crypto space. And in all fairness, there's a bunch of juniors in the crypto space. They're just called altcoins and different types of coins that, hey, who knows how high some of those can go on the back of not really a whole lot other than more interest from younger generations. But Dave, just even outside of the juniors, the majors, they need to do better as well. I know there's a handful of majors at all-time highs, but it's not all of them. And that in itself can bring in more interest and filter money down. So don't we still need to be watching the larger majors, whether we like them or not, to lead investors in?
Oh, absolutely, especially the big boy, Newmont, right? I mean, when they disappointed on costs, I think it was like $200 higher than expected. The stock has really taken a hit, and I think it's down like 35-40% since then. So when you take a look at the bellwether, the big boy, the one that the major funds and anybody who's retail that is starting to get interested in this sector, the big boy needs to start performing better, and that's Newmont. It has to get back above 50, and it just lost $40. I think it has to get back above 50 and starting to trend higher before this sector really starts to attract more investors.
So, Dave, in terms of your portfolio, then, look, obviously, I'm sure some of your stocks are dropping along with all of ours into the end of the year. A lot of these stocks, if you were selective, have still done well this year, but what sort of portfolio changes, if any, will you do as we transition into a new year with a little bit different momentum than we have seen this most of this year that was simply higher for these stocks?
Yeah, well, I already made them. The end of the year here during this tax loss selling that has really increased is not the time to make changes. The changes that I was going to make, I mean, I've got about a 10% cash position in the portfolio now and sold some things for tax loss. And you're a subscriber as well. You've noticed that I've had everything in the portfolio as a hold rating ever since the Trump reaction in the sector. We had basically the mining sector peak before the gold price peaked. And basically, like I said earlier, it was because of basically Newmont quarterly report that really disappointed investors on the higher cost. That's what started to take the mining sector down before gold. So the miners were telling us that the gold price was peaking and was likely to have at least a 10% correction. And that's exactly what's happened here. So it still could turn into a further correction of about 12% or so. But like I said, I don't see the gold price going much lower than 2450, 2500. And also, like I said, that would be, basically a healthy correction in any bull market to come back and test its sharply rising 200-day moving average.
Yeah, still historically a strong gold price. The problem just being it has turned a little bit, and quite frankly, investors need to see higher and higher gold prices day after day, week after week to filter down into the stocks, and that's what benefits the stocks. As of right now, I think a lot of people are in kind of a wait and see mode just to see where this maybe bottoms out and again, see what Trump does when he comes into office. Dave, we'll wrap it up here. Not much more to say about the sector. Again, other than I think we're all waiting to see where we bottom. We will see what that all looks like in the new year because that's when I'm sure we'll be chatting again. So, Dave, thank you for all your time this year. I hope you have a very Merry Christmas, Happy Holidays, and a Happy New Year.
Thank you, Corey, and happy holidays, happy new year to all your listeners and to you and Chad as well. Thanks again.